There are two types of cash flow statement. One is the direct method, another is the indirect method. Three calculations which we are supposed to go with. One is the operating, second is the investing, and the third one is the financing. Now financing in the sense what? It's all about your shares, your debenture, your preferences. Hello everybody, a warm welcome to one and all. I'm Abhilash Chandra from the Department of Commerce and Management in Vidhyaashram First Grade College, the Temple of Excellence. Welcome to all the students for the third session of cost flow statement. Now what exactly we have in this session? Let me just tell you now. Whenever we go with any kind of a problem, we are supposed to know few of the formats, rules, regulation, procedure, accounting standards, as well as the Indian accounting standards, because these are the standards which always want us to go for a format. So today I'm going to go and share with you people with the format of the cash flow statement. So here when we go with the types of cash flow statement, what are the types of cash flow statement? There are two types of cash flow statement. One is the direct method, another is the indirect method. So in your question paper, if they ask you, you are supposed to calculate the cash flow statement indirect method. When they say that, now indirect method, understand, this is what the method you are supposed to go. If they tell you to calculate a direct method, so calculate in this. So both the formats, I'm going to actually explain it to you what exactly it is. So we'll start with the session with the types of cash flow statement. So here we have direct method. First we'll go with the direct method, then we will go with the indirect method. So when it comes to direct method, the minute you see the entire format, don't get confused. What is this? Let's go baby steps. Let's understand each and every adjustments here. Whenever we go with cash flow statement, you are supposed to remember there are three items which you are supposed to be very careful. Three calculations which we are supposed to go with. One is the operating, second is the investing, and the third one is the financing. So whenever you go with cash flow statement, always we are supposed to calculate three formats, different formats. The first one is operating, second is investing, and the third is financing. So it is like this: operating, investing, financing. So firstly, when we go with operating, what happens is we need to understand for operating what all we are supposed to require. Here two things which you are supposed to remember is what goes out and what comes in. Your inflow and outflow you are supposed to be very careful about. See, whatever you receive, right, that means what? It is coming to your pocket. Whatever you are supposed to give, that means what? From your pocket it goes out. So if you know this combination of what comes in and what goes out, your operating income or the operating format is very easy for you people to actually calculate. The first thing here is when we go with particulars, the amount column. So you know what exactly the amount column is. The here inner and the outer is there, and you will actually get to know what exactly you are supposed to calculate. Now firstly, when we go with it, cash flow from operating activities. First one is what? Operating activity we need to calculate. Whenever we go with the operating activities, the first one is operating cash receipt. So cash receipt, you are actually receiving it. So what all you can actually go with the cash receipt of operating. Please, I'm just stressing to this. Only operating cash receipt you are supposed to take it here. So I have given all the adjustments. Even in your question paper, if they ask you anything, you just need to go with these adjustments. The first one is cash sales. Now you will actually go for a sale and then you will get our money. That is the cash sale. Here it is what? The receipt for your company. Cash received from the debtors, that is the customers. Now you have sold something. Now the customers will give you the money. Now what happens is you are getting the money. That is what? The cash received from the customers. Next is trading commission received. Now you have done that. You have received a commission about it. So where you will actually go? Operating format only you will actually go at. Next is royalties received. Now royalty is something which is what? The way royalty received, many people get a confusion here is, sir, why is that royalty is given? Now they have used my name and they are supposed to pay me the royalty. Now again, it is what? They are supposed to pay me. That means what? It is again in the receipt side. Next is all this is what? The cash receipt is there. Now here, till here cash receipt is there. Now cash receipt. Now that I need to subtract with the cash payment. Now this is all the money which I get. Next, what is that I should do? What all I should pay? Where all I should pay? That one I should subtract it. That's why it is what? Less. Operating cash payments. So operating cash payment, what is it? Cash payment. Now here cash sale. So it is ulta is how much? Cash purchase. That is if I purchase any time, then what is it? It is all payment. Next, cash paid to suppliers. Now here what has happened? I have received from customers. Now I need to pay for whom? The suppliers. So again it is less. Next is cash paid for business expenses like office expenses. See, all these expenses, office expenses, manufacturing expenses, selling and distribution expenses, all the expenses are what? Operating, but it is from my pocket, it goes to them. So it is all what? Again, we need to go for less than. So when you go with all these things, understand, you get something called cash generated from operation. So this is what? The total. You need to add all cash receipt, subtract with the operating cash payment. Then what is that you will have? You will have the exact amount from the operating operations. After that, when you get this, you will actually add here, subtract this, and then you will get what? The exact operating cash, what really you have right now. Then what is that you will do is, because you know what is your profit, then you will go with deducting it with the income tax. Now income tax paid, that is net of the tax refund received. So then what exactly you get? This is your operating activities. This is exactly your operating activity. We call it as net cash flow from operating activity. So this is what the operating activity calculations. So this is the first format. Next, we'll go with the cash flow from investing activity. What is that we are supposed to do? See, operating is there, investing is there, finance is there. Operating is done. Next, two more is there. What exactly the investing in the sense? Again, inflow and your outflow. If you calculate that, that will become your net investing. So here, what is the trick? How to remember? This is very simple. Whatever comes in, you are supposed to add. Whatever goes out, that is what you are supposed to subtract. So here, proceeding from sale of fixed assets. Now you have done something. Fixed asset is that you have actually sold that. Now that means what? Cash will come to you. That means what? That is always you need to add it. Next, proceed from sale of intangible asset. Intangible assets like your goodwill is there, your copyrights is there, all intangible asset. You will actually again sell it. Now you will get money out of it. That you will supposed to add in what? That is investing activity. You are investing and you are getting the money. Next is proceed from sale of investment. Again, sale of investment. You are getting the money from it. Interest and dividend received. Whatever comes to your pocket, that is investing money. Only investing money. See, the first one, operating, whatever comes to your pocket, that is in operating. Whatever you invest and then you take money, that is all you are investing. Then disposal of joint venture, subsidiary and association. Now in the University of Mysore, you don't have this disposal of joint venture, all this, but I have given it to you because you should know. Say example, you have gone for a disposal of joint venture. You will receive money, isn't it? Earlier you have invested, now you have got the money. That also you will add it. Subsidiaries. Now we have a small subsidiary companies. Now if we go for any of the sale of those, again investing in the sense, now we get money. So there we will actually go with adding it with the investing activities. Next is what? Less. You need to subtract whatever you have invested. When you get the money, that is what you call that as investing activity. In that we have the inflows. Now it is all the outflow. What all goes? Say rent. Now we have rent paid. What is it? Rent paid. That means I'm giving the money. Again, it is outflow. So I'll go with less rent paid. Purchase of fixed asset. Now if I invest in the sense, now if I purchase any fixed asset, money is going out of the company. So it is less. Purchase of intangible asset. Now I'll purchase. What will happen? It's going, the money goes. Now, investment, acquisition of subsidiary. Now, if I acquire any of the subsidiary company of some other companies, now what happens? I need to pay them the money. So, money goes from me. Very simple, investing. Whatever I get, I'll put it here. Whatever the money goes, that I'll put it here. Then what happens is, I'll subtract with the same. Now, whatever is plus, it's all here. Whatever goes from me, what happens is, I'll go for negative. That means it's all, I need to less it. And this is called what? This is my net. This is what my real, that is net cash from investing activity. So we are done with operating, then we went with investing. Now we are left with financing. Now financing in the sense what? It's all about your shares, your debenture, your preferences, all are what? Financing. Now when we go with the cash flow from financing activity, what happens is, the first one here is proceed from issue of shares and debentures. Now we'll go with issue of shares and debentures, we get money. Proceed from other long-term borrowings, again we get money. Less dividend and interim dividend paid. Next we have is interest on debentures and loans. Then we have repayment of loans, redemption and debentures or preferences. Whenever we go for any redemption, what happens is, from our pocket it goes. When we actually issue shares or debentures, what happens is, we actually get money. But when it comes to redemption, what happens is, we'll actually need to pay the amount. Now after all these, what happens is, we get what? Net cash from financing activity. So we have taken what actually will be the financial activities. Now we'll add and we'll subtract it, then we'll get the net. Now what is it? We need to go with the net increase or decrease in cash and cash equivalent is the heading which we are supposed to go. See, we are in the entire cash flow, we are only dealing with the cash or cash equivalent. So 1, 2, 3. What are the 1, 2, 3? First one, what did we do? Operating plus investing plus financing. All the three you are supposed to add, and then you are supposed to put it here. All the three things done. Just to check whether your answer is right or wrong, please understand. In the balance sheet, only they will give you the opening balance and the closing balance. Now after this, you are supposed to add your opening balance. If you add your opening balance, your answer should be what? The closing balance. If your answer is correct, that means the entire format, whatever you have done, it is all correct. So this is what you are supposed to do. That means here, cash and cash equivalent, that is the beginning of the year, what it will be, you will add with the cash equivalent from O, I and F. Then what it will be remaining, that is what your closing balance of the next year. So this is a format of direct method. So what is that we are supposed to do? We are supposed to calculate three things. One is the operating, second is the investing, and the third is the financing. If you are done with all the three, you need to add the opening balance. If you add opening balance, you will definitely get the closing balance. If you get it, your answer is correct. So it's a lengthy problem, but still, the more you practice it, you will feel that it is so easy, as well as you can get 15 marks if you prepare the cash flow statement. That is a direct way. Now when we go with the indirect method, what happens in the indirect method? The indirect method adjusts accrual basis of net profit or loss for the effect of non-cash transaction. Next here is direct method provides more understandable information not disclosed under indirect method. Here indirect method, you will not get all the clarity. Only in the direct method you have clarity, because you have operating proper. Next we'll go with investing, then we'll go with what? Financing. So everything is proper, but here they will not disclose each and everything. Indirect method is far more preferred because it is easier to get the information based on accounting records. But let me just tell you here, whether it is indirect or direct, it depends on each and every company what exactly they want to show to the entire public. That is the reason cash flow, or is it fund flow, it is for the internal people as well as for the external. But Just by seeing the cash flow and the fund flow, people shouldn't decide that the company is making profit, the company is not making profit. That is what the problem is. I'll show you the indirect method format here. The format for the indirect goes like this. Again, we have operating. Again, we have the same kind, investing, and we have financing, but a slight difference of operating, only the operating, but investing and finance is the same way what we have done in the directing. Here what happens is, in the indirect, cash flow from operating, the first itself they'll take what? The net profit as per the P&L account. The first thing only is what? The net profit, they'll take it, and then they will actually go with the opening balance of the PL account. All these things we will go with this. Then add all the things, that is here the total net, in the sense transfer of reserve, proposed dividend, interim dividend, then proposal of tax made, and then they'll make it as a net profit before tax. So see, the net profit before tax, in the sense all these items are already there, but what happens is they'll only show this one. So when they show this one, we feel that the profit is very less, but the reality is what? We need to show all these items, so that only we'll get to know that the profit is more than what they have shown. This is what the difference of indirect and direct. So any doubt regarding the format, please call us. We are always there to help you. Thank you so much. I'll see you when I see you.